Officially, good morning, happy Sunday. Welcome out, everyone, to the Options Income Launchpad Sunday Market Insights. My name is Scott. I will be your host. Sunny in Sacramento, Melody said. I think we hit 62 here in Utah. Pretty abnormal for early February. Hasn't snowed in a while. As always, what we do is for education illustrative purposes only. Nothing should ever be intended as a recommendation to buy or sell. We're not brokers or advisors, therefore don't give personalized investment advice. Any decisions made based on any information you get from us should be done so at your own risk. Yada, yada, yada. How does one work with charts like this? Right, Stephen? You're not wrong. The frustration is real. If you don't know what he's talking about the SPY chart. It's some sort of a data feed error that is just unresolved, which is crazy. Although as I say that, I'm like, somebody should say something. And then I don't say something. And so if we all do that, that's like, yeah, I don't know. I guarantee someone said something. It just wasn't me. Okay. Let's go posture. We'll take a peek at the economic calendar. It's a little bit abnormal because we didn't get jobs last week. We're getting it this week. We're not getting it on a Friday. We're getting it on a Wednesday. So that's a bit normal. We are going to talk about sectors, obviously. We've been doing watch list maintenance. We will make an early week opportunity list. Although as I pull my drawer open, I don't have a note card. Whoa. Now I have one. Okay. Let's keep going. Oh, what happened to my slides? Did I exit them? Huh. Well, you saw the agenda. We're good to go. Let's roll. Let's roll on. Let's see. Market posture. And today is February 8th. The year 2026 is already moving quickly. Okay. I also need to get one more thing ready to go. I need to get the Oracle ready to go. The Oracle. I should change the name. The Oracle. If we ever decide we want a different name, we can make that choice. The Oracle. Okay. Let's go. Now, what's the issue that Stephen was talking about, which is going to impact our scores? Let's see. Yeah, this is interesting. How are we going to do this? No. Let's go weekly. Okay, so here's what I'm going to do. I have a secondary chart here, and I'm going to go 5-year weekly. And then I'm going to take 2 years off of it. Does this thing zoom in a little bit? Okay, there we go. How far back is that? It doesn't have all my lines, though. That's the frustrating thing. Yeah, Steven. Oh, you're not seeing anything? Well, that's probably okay. Okay. It's missing the lines. All right. I'm going to try it. I'm going to try this one first. And I'm going to see if I can just like cut it off. Nope. October. How far back is 3 years? Maybe I... Oh, I'm on the whole chart right now? Okay, sorry. Sorry. Let's do this again. I'm going to do that. And now, mine's an easy score because it stayed in. And I think ChatGPT's is probably going to be an easy score as well. Where did I put it? I'll just put it here at the end. So, long-term trend. This week's chart for analysis. Today is 2/8/26. This chart is a bit funky due to a bad data feed causing a very long shadow on a candle that didn't actually occur. Paste. Okay, let's see if a little explanation allows this to still work. Ooh, line on close would definitely, a line chart should just definitely, because it's only unchanged. Looks good. Okay, fair enough. That was easy. That was easy. We'll go down to short term next. Now, short term, I think I can actually just... I'm going to try to... this is normally what we would show for the short term. But it doesn't need the lines. It needs to see the angle, right? So I'm going to maybe try to load. Where is it? Did I lose a whole window here? What's going on? Oh no, this is the window. Sorry. And the chart is here. And let's go 6 months. All right, I'm going to try this one. And okay. We'll have to give it a little explanation. Due to a bad candle causing a skewed chart. It is a slightly different chart this week. 02, 08, 26. Disregard the volume bars that appear at the bottom. Okay. Okay. Hey, Vladimir, good to see you. It stayed 1.5. Currently holding. Does that look like a 1.5? I mean, it is kind of like, let's talk about this one. Because I was thinking I'm kind of thinking short-term trend. I need to drop mine because we made a same low. Same high, same low. Like, I'm going to drop mine. I am going to drop mine. I get what it's like. There is sort of like overall there has this, but we're a little bit. I'm trying to be a little bit more. So yeah, all right. I'm due to the fact on my analysis that we hit a prior low. We didn't break it, but we got down to it. The fact that we've kind of had a bit of a sideways, I'm going to actually take mine down 1/4 of a point. I was at a 1, and I'm going to go 0.75. 0.75 for me. The model is staying at a 1.5. It likes what it sees still. And it was definitely orienting this week towards a more bearish inclination until Friday, at which point there was a bit of salvation. So let's see. Volume. Now, my thought for volume is I'm going to load. This has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. I'm just making sure that they're consistent. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Did we get above average volume? Yes. Was it enough above average volume? I think no. My AI does not like my opinion. Oh, no. I didn't see a new low on this. Is that on the 6 month? I saw a test of a prior low, short term. Yeah. It wasn't a new low. We reached the same prior low. And if we have a same prior low and same prior high, well, that kind of means sideways, right? So you can tell it that. Yeah. Because once I have 2 points, I have a line, right? I don't have a line until I have 2 points. So if I have a low and then the same low and I draw a line, what direction is that line going? Sideways. Okay. Let's take this to 7. I'm going to try it. And I'm going to actually, okay, I know what I'm going to do. Okay, let's get this chart here. Good discussions today. I like it. People are bringing their, like, my AI said this. Well, my AI is called the Oracle. So when I'll be like, the Oracle said, yeah. Okay. Let's get this posted. This week's chart for analysis. 02, 08, 26. You will see a bad print candle with a very long shadow that did not occur, skewing the perception of the chart. I am adding a second price action chart for additional perspective. Okay. So I'm also going to give this chart. Oh no, this is for volume. Oh shoot, I just did that wrong. All right, I'm gonna have to just copy this, get rid of these two. Son of a gun. Okay, so we've done short term, now volume. Here's the explanation. Here is this chart. I think that it's pretty important. I think right now, getting the market right is pretty important for us. So I'm glad we're having these discussions. Because, God, this is such an ugly chart. Whoops, such an ugly chart. Okay. Go. Now, our analysis. This is 89 million over 86 million. That's only 3 million extra. And we need at least like 4.3 million extra. So that's only about 103 or 104% of average. And we need it to be 105. So it doesn't even earn a gray box. If it had earned a gray box, it was a bullish day. So it's like, oh. Now, I'm going minus on this one. I now have 2 extra days of sellers that are over here. My line slopes sideways with that recovery candle, right? But we can't ignore those 2 volume days right there. I am dropping to a minus 0.25. Okay, I'm going to go check the Oracle, and I want to hear from everybody else. Where are you on volume? This is my first foray into negative scoring. Now, the Oracle last week was at a 0.25, so let's go see where things stand now. Still a 0.25. See, so I disagree. I am going to be like, wait, last week we had 2 sell days. There, I can get the date in there. This is challenging the logic. No true expansion. It seems the expansion was negative with 2 new above average volume days that were controlled by the sellers. Was this accounted for when maintaining the current score? Come on, Oracle. So Don still says a 0.25. Oh, did I attach the image? I did. Yeah, there it is. See, look, yours did the same thing. It said no expansion on down days. But our definition of expansion is 5%. If it's got over 5% volume, and those definitely did, right? These days was definite expansion. Seller, seller. It was tie, seller, seller. That's expansion, right? You can see here we had 22 million. That was 125% volume. This one here, 113 on 85. That was even more so. So that if the model, that's why the Oracle needed to say, you're right. Once you correctly factor in 2 new above average volume days controlled by sellers, it should downgrade back to neutral. Both are clearly marked with sells. They occur late in the window. They are not noise bars. They exceed this. This matters. Right? Now, because 0.25 assumes buyer leaning participation. Seller controlled expansion invalidates that. Expansion overrides ties. There it is. There it is. In fact, the well, I don't know. This is weird. Price alone, this should only be, to reiterate, this is a volume analysis. Price is only considered after daily volume requirements are met, and yeah, that's fine. Okay. Neutral score. Let's move on. We're going to get stuck. It was a little dicey this week with that bad data feed, but I think this makes sense. You can't say I'm keeping it because it didn't expand when it clearly expanded. Okay, let's keep going. Let's do. This is where I think it's going to get interesting. So. Okay, let's get this first chart. Major market analysis. This week's chart. Analysis. Okay. So, based on current scores and as you've been scoring it, talk to me about adjustments you've made. Is your risk levels higher, lower? Are you taking more or less trades? Are you taking bigger or smaller trades? Are you exiting faster or hold like what adjustments? If your market posture has dropped, what are your adjustments? That'll be the point of discussion while we're going through this analysis. On the start of this, we're still NASDAQ and Russell led. Dow is still in the lagging position. This still has a bullish starting perspective from the 200. But then we drop to the 133, and immediately we have a shift. And this is actually getting worse, right? We used to have the 200 and the 133 in our favor, and now it's like, whoa. Now when we look at it, we have Russell leading, and we have the NASDAQ having fallen into a lagging position. Not good. Not good. Okay. Is that 2? Yes. We drop it to 66. This is where we score now. Very interesting because we still have small caps on top. But we now have the S&P lagging. I mean, sorry. The S&P is lagging. No, the NASDAQ's lagging. You got my numbers crossed. The NASDAQ's lagging. S&P where it's supposed to be. The Dow is moving forward, but it's not a clear cut like risk off scenario. With the Russell still moving higher, with people moving into small caps. It's very interesting. I think I'm going to leave mine the same. It looks like it did. Certainly, we would like to see. I'm a bit concerned that we're relying on small caps to carry the day, but so far we are seeing it. We'd like to see NASDAQ re-engage for sure. That's just a stronger market, obviously. To have tech in line. As we know, tech, from a sector rotation standpoint, can literally be the only bullish sector. And I would still score it positively with a 0.25. And now, let's get the 22. John Welsh is like, get to the 22, buddy. Should we pay more attention? You know what? Honestly, even if we did, it's showing the same thing. It's showing Russell led, the Dow in a secondary position, the NASDAQ in a lagging position. Same thing we just saw on the 66 day. So more of the same. But no, I'm going to keep it, this is the tiebreaker if necessary. But right now, I think we have that's the wrong date. We have more of the same. I'm keeping mine at a 0.5. And let's go see. All right, some of the things people are doing. Risk level is lower. Tighter stops, early exits, El Jago says. Fewer trades, closed out winners with a possible lower profit. Closed out losers sooner preserve capital. These are great. Close many positions, open fewer trades. My AI scores the market as difficult. So it gives it even like a little bit of an assessment beyond just the number. Okay, what's the score? 0.5, stayed the same. Russell clear leader, NASDAQ lags, not acting as a secondary leader, preventing any expansion. Dow and S&P are constructive, but they're contextual participants. Risk on, but incomplete. There, it's great. So eloquent in its explanations. Okay. Let's move on to... okay, so quick question. Are people reading notes from the Oracle, the little secondary post that I'm putting on Sundays? Like, if no one cares and no one's reading it, I'll probably stop doing it. But if people are like, no, I like to read through that. Yes, okay. Then I will keep doing it. I do feel like it's pretty succinct. Gabe's like, no time. That's fair. I don't judge that. Okay. This week's charts for analysis. 02, 08, 26. I hope everyone had a pass at their trading plan. Got section 1, some notes about themselves. Strengths, weaknesses, commitment and discipline. Mission statement, vision statement. Let's see. NASDAQ leading here, but we know that is just not going to hold up. We see industrials moving higher. We see energy moving higher. Those are the only ones above. Here we have staples lagging, and we know that's not going to stay the same. It's a shift between the bullish and the defensive that we see, the growth and the defensive that we see positioned this way. So whatever this starts as, we know this is drifting dramatically. Here, what do we have? Energy on top. That's more inflationary. We have healthcare. If anything, it's a little more defensive. Materials, that's more inflationary. And then we have one growth here. That's industrials. So as far as growth segments go, industrials is one we want to keep an eye on this week. Let's make a mental note of that. Communication services was trying, but has pulled back. Consumer staples has surged above the market. And then we have these guys down here. So, yeah, it's not looking so hot. Let's drop to 66. Here's where we're going to score. Oh, I've been forgetting to take my damn pictures. Come on, Scott. You're better than that. Let's go back. I only missed one. 133. Take a picture. And put it on. And let's go to 66. Take a picture. Put it on. I keep wanting to go to that for some reason. I don't know why. What do we have leading? We have materials. Inflationary more than anything. We have energy. The longer this shows up here, the worse off things will be. It's now multiple weeks that we're seeing this develop, and now who's joining them? This is defensive. This is staples. This is, if anything, more defensive than not. Healthcare. We have one growth, industrials. Then down here we have financials. It's doing its best, and it's technically still above. And we have communication services, and it's doing its best, and it's also technically still above. Whoa, I gotta tell you, I'm getting close to a minus on this one. Where do we all stand here? Let's chat this through. I will say this. The last time when we had a consistently led by commodity-based sectors, 2007, leading into 2008. Not good, right? There was a lot of things happening that was causing things to cost more. It became stagflationary at that time. Oh, Stephen D is already at a minus 0.5. Yeah, I mean, I don't see a lot of defensiveness, but yeah, I see enough defensiveness, right? This is the core defensiveness. I'm going to drop mine to a minus 0.25 today. Current leadership is driven by materials and energy strength. Yeah, Don, that's fair, right? It's commodity driven rather than like defensive. But when you look at who's next, it's defensive. Staples. Utilities are quite far down. Let's say we were a tie. Let's see what the 22 brings us. Energy, staples, materials, industrial. So we have one growth, and then we have utilities. I don't know. I think the minus 0.25 makes sense. I don't think I'm all the way to like a minus 0.5. Steven sees a little bit more negativity. But yeah, I do think that I guess I may as well just get this to the VIX to get ready. And let's get you to 6 months. Let's get here. Okay. Huh. Well, I'll be a monkey's uncle. This is quite the divergence here. So on the 66, it's saying there's some industrial improvement. Let's go back and let's just kind of look through what it says here. Okay. So there's financials here, and there is a little bit of improvement. You can see it's improved, and it is above here. Healthcare remains elevated. So its leadership's more constructive, led by materials and energy, with industrials and finance showing improving relative strength. Healthcare is elevated, but no longer acting alone. While technology stabilizes. Did technology stabilize? I don't feel like it did. Technology's at the very bottom on this one here. And staples, yeah, I think I need to say it seems on the 66-day scoring perspective, tech is at the very bottom, which means not stabilizing, and staples is moving in a leadership fashion, which carries defensive interpretation. Worth a reassessment. Again, we're only point. I'm not trying to change how it does it. I'm just saying if it says something that is off, staples 0. Okay, yeah. So it's a 0, which is what it was. Yeah, I mean, come on. You can't. Defensive sectors are leading while cyclicals lag, indicating capital preservation rather than neutral or expansionary. I mean, I kind of think capital preservation is neutral, but I would say rather than defensive, right? I am neutral. I went slightly negative, minus 0.25. Simply because, yeah, I do see staples as a bit more of a defensive than that. Okay. Both can be true simultaneously. That's true. Yeah, very interesting. I love it. Good perspective. I got to tell you, at this point, I'm now looking at a 2-point drop from the last month. The Oracle's staying more bullish than me, which is good. I'd rather it, if anything, if it's like, hey, maybe it's not like I'm going bearish or anything like that. Although I am getting to a point where I'm about to start opening the door for that. More so, yeah. So keep that in mind. Some of you may already be doing that. Let's go finish this up, and then we'll get to the watch list. Section 2 of your trading plan is exactly what we're doing today. You're just standardizing it. You're noting it. What are the things you do? We have 6 components. This is how we look at them. This is what we try to glean from it. What does the posture tell you? It helps me understand risk levels and trade management mechanisms. Are stops closer or looser? Am I more willing to take a loss? Things like that, right? What is my trading posture? So it's just formalizing all of this. Let's go to VIX. Should be an easy one for you. Okay. This week's chart for analysis. This should be your easiest section to get to an 8 in no time. Right? Because we all doing this all together every week. The only part that you'll maybe struggle with refining is your specific implications. What are you doing with this information? Okay. Let's get a chart. I think I'm going to have to lower mine because of the higher high. Nobody likes a higher high on the VIX. That's expansionary. That's fear expanding. Boom. I don't understand how it raised its score. The model really is trying to get bearish on me here. Okay. Okay. I posted a new pick with some lines. You said this was a failed expansion attempt and improved your score. The connected lines appear to be mid-expansion. No? Tony Z's a little suspicious. It's mixing some, like it's moving away from what it's supposed to do from this specific chat. We should distinguish suppressed, dormant, developing, confirmed, clearly stay 2. Raising the score. What? Expanding volatility is rising fear. Score going up should represent falling fear. This is an inversely correlated analysis. Do you need a full review on this indicator? Come on, Oracle. You're embarrassing me in front of my friends. Gabe said his tried to be bullish. Tony Z sees it. Always wants to be like, come on. Okay, let's fix the principles. VIX up, expanding, rising fear. VIX down, compressing, falling fear. Your score is inversely correlated to fear. Score goes up, more constructive, calmer. Score goes down, more caution, rising fear. So yes, should never improve the score. Yeah, it sure was wrong. The drawn trend lines do show developing expansion. This is rising fear, even if it's not full volatility regime. Okay. I need him. He said 0.25 to 0.5. Your previous score was 0.75. Give me this week's score along with the rationale. Okay, we're gonna have to fly through the watch list. The model, the Oracle needed work today. 0.5. All right, so I'll wait for that. Let's put that in. Market. Nope, not 5. 0.5. That'd be a great score. Okay, 375 for the Oracle. 275. Oh no, I need to put mine down. 0.5 for me as well. Higher high. Higher high. Lose a quarter point. It's that simple. It's that simple. Did it get some back? Yeah, it did, but it still made a higher high. And if it stabilizes in this area and then starts to go up again, that would be more expansion. So I'm a 2.5. The Oracle's a 3.75. Give me your final score and your model's final score. Steven and I are in the same place, 2.5. We're maybe the low end then. I caught up to him. Vladimir says, not a great market to trade. Amen. What are we thinking? We're thinking less risk on. I might even put a message out that says, hey, we only did one alert last week. Why? Well, the market was, this is what's happening. We're not going to force trades when the market's dropping. We're going to say, hey, let's trade what makes sense. 275. Anybody else want to put theirs out? We've already talked about the trading plan. You're on section 2. Let's take a quick peek at the economic calendar. 375. Okay, Gabe's the most bullish so far. Anybody more bullish than that? 375, which is the same as my model, the Oracle. Gabe and the model are both 375. That's the most bullish. What do we have this week? We have Fed speak on Monday. Nobody cares right now. Nobody thinks anything about the Fed. Tuesday, what do we have? We've got retail sales. A couple minor things. Don, you're a 3.5 and your model is a minus 0.25 overall. Your model is bearish. Wednesday, jobs, labor. Thursday, standard jobs, consumer weekly jobless claims, and then Friday's a big one, CPI. They are trying to project inflation coming down. Well, that would be helpful. I mean, if the market sees that, if we see things in 2.5%, that could be very useful, actually. Very useful. Okay. Let's get to the watch list. I've got my note card ready. Alcoa, no, not yet. Apple, yes. Yes, when it pulls back. Not like, oh, I'm ready to trade it. If it pulls back. It's now back into a bullish tradable position. Archer Daniels is a yes. Weird reaction to earnings, but now back into this situation, and we know that consumer staples, we're going to go do another consumer staples look, is still surging. So on the next pullback. AMAT, yes. Could be a continuation trade there. The earnings, you can still get a few days out of it. That's a maybe. AMKR has earnings tomorrow. That's a no. Amazon is a clear no. APH is a no. We're starting to see more of these things that are dropping. We're going to start to clean them off the list. ASX, strong, coming out of earnings, but not really tradable right now. AXP, still a no, still kind of sideways. BABA, maybe. Maybe for BABA. Alibaba. Bank of America, bullish, but needs a pullback. I'd still put it on my list. Financials are trying. BCS got earnings. Maybe hold off on that one. Bud. Yeah, it's a little overextended. Too close to earnings. Citi. Woohoo. Anybody still carrying a piece? I still have a little piece of mine. Great recovery on Citi. Caterpillar looks good. CF. Coherent recovered, but it's still a little bit down. Cisco. Strong, but earnings are coming up, so we're probably going to have to relax on that one. Delta Airlines. Oh, Delta was big. Big up. There's the Dow. And here is Dow Chemical. Yeah, Dow looks actually like it could make another move. Ford. Earnings, we're going to have to hold off on this one. GE showing some strength still. A little pullback could give us a bump on this one. 3.5. Gold. No. GM. Yes, still for me. Google, yes, absolutely. Google is one that is looking close. That gets a little star. Goldman Sachs. I mean, it is bouncing off the 50 pretty well. I'm still going to include it. Home Depot. Maybe. HL. That's in consolidation for me, even though it's sitting on the 50. IBM, no. Intel's back in favor. Let's keep an eye on Intel trying to make a move. IVZ, a little bit too much to the downside. IWM, looking pretty good still. Lumentum, overextended. LRCX looks good. That could turn into a possible continuation trade where we move to the Heiken Ashies. Might have missed the initial, but we'll see if we can catch what's next. What time is it? Okay. Yeah, we'll only be 5 minutes over. Meta. I'm going to put Meta on. If it can hold here in turn, we may have a trade even just back to 740. Let's keep an eye on this one. Monster. That's a questionable liquidity and has already kind of made its existing move. Morgan. I'm going to say maybe Goldman looks a little better than this one, so I'm going to hold off putting that on. Microsoft is a no. Micron is a strong candidate for even possibly Monday morning. Looking like this thing's going to make a turn. We're going to keep an eye on how we would want to put together that trade, but certainly it's got some good prospects. Micron and Google, those are the, right? Let's see if those guys can help lead technology. Netflix down, no good. New, it's on. Looks good. We took it. And we put it out. You should have seen the alerts and texts late Friday afternoon, and we'll see. You can see high volatility. Staged for Monday. Beautiful. Beautiful. As I'm going to say, should still be all set and ready to go for Monday. All set. Surprised I went with just 1 day positive. I mean, that's, once I have the trend and I'm convinced, you can see my stochastics turned. I've turned. Looks exactly like a lot of these do to me. So, yeah, pattern's good. NVIDIA is a no for me. Palantir is obviously a no for me. Rocket Lab is a no. Boo to Rocket Lab. RTX. I like RTX. I think RTX still looks nice. I want you to notice our watch list is also shrunk a little bit. There's that natural correlation. When our posture is a 5 or a 6, we're going to find 25, 30 things on our weekly list. Right now we're 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So it's starting to shrink on us a little bit. SNDK, it's a high flyer. Every time you think it might not go higher, it does. But you can also see we have, it made a big move up and then had this consolidation. Big move up, could be another consolidation. I'm going to hold off on that one. SPY, STX. STX is a maybe. It's in a bit of a consolidation here. SYY. Still overextended. TJX. Overextended. I'd trade TJX on a pullback.
This.
Tesla, TSM. TSM looks strong, but I'm not sure it looks tradable. I'm going to hold off there. Vail looks pretty good. If you're going to go back into something silver-based, that could be it. Viking, no. VOD. It's a bit choppy. I'd put it on. So let's maybe keep an eye on it this week. WDC, I'll still watch that one. And Walmart, overextended. We're going to have to be patient. It's probably going to be at least a week before we see. You can see the last consolidation took about 10 days. Right? Last consolidation took about 10 days. But overall, Walmart's very, very strong stock. There's the list. Not quite 20, I think. So still bullish, but reflective of a market that has deteriorated to some extent. You can see a number of our stocks have regressed as well. Here is AMD for Vladimir. I wanted to hear on Amazon. Amazon's not looking great. Same with AMD for me. It gapped down on earnings. It actually broke this 200 mark that had been holding up. A little bit of a recovery, but I would be thinking it's got to get more at this point. It's on a recovery mission. Amazon, same kind of a thing. I mean, it gapped down. It's just at like new lows, possibly 52-week lows. Let's see. Not quite, but it's in my opinion, probably best to wait for the dust to settle on one like that. Okay. Well, there it is. It's trying to hold on. It's not quite moved into like neutral for me yet. Hanging on to some slight bullishness, but we're definitely seeing some regression in the market. The market's the Oracle's down a point over 5 weeks. I'm down 2 points and change over that same period of time. Either way you look at it, we are seeing deterioration. So, yeah, there you go. All right. Well, it's great to see everybody. this is what we carry forward. I still think there's trades. I mean, like I said, Micron, Google both look quite strong early in the week. I think that with a little bit of positive action, there's other trades that are in setup mode. So we're still gonna pick where it's going to be a little bit more discriminate, manage our risk a little differently until we see some improvement in conditions. Let's be water, my friends. Good to see you guys. Have a great rest of your Sunday. I'll see you tomorrow morning. As always, happy trading.